Okay, we're going to move on now to the first session of the day. It is the great protection technology myth. So I think Sarah has set us up really well for this first session. I'm going to start with a grand sweeping statement, which is on average, most people from both inside and outside the industry generally say that technology is a bit rubbish. It's a bit behind other industries. There's a lot of, oh, look at that shiny, clever app or shiny gizmo over there. Why can't we do that? And so on. But is this true? Is our technology that bad? Or is it a myth? That's the question that we want to answer throughout the rest of the first session. Is it technology or is it data and consent that holds us back? If tech is the problem, then if budget and resource were no issue, what would we all go away and build on Monday, which would double the size of the market? There are lots of ideas out there to grow or save a few percentages or even 0.01%, but real growth, what clever piece of tech would make tons more people buy tons more protection overnight? And if we're going to be disrupted, wouldn't it have happened by now? Are the likes of Google making more money selling life assurance leads than actually selling life assurance? And if the problem isn't the tech, might it be us, the people? Or should we stop beating ourselves up and be thankful for what we have and to just get on with it? These are some of the big questions, and thankfully, I don't have to answer those questions, or Kevin didn't need to answer these questions. We have 3 expert speakers who are going to try and answer those questions that I've just posed. And then we'll have our usual panel debate, which will get into those issues in a lot more detail. So our first of 3 speakers is Alastair Gerrard. Alastair is head of sales and marketing at Gen Re in the UK. He's an actuary. He's previously worked in Germany. He's worked on numerous innovations and likes watching cricket. Please welcome to the stage, Alastair Gerrard.
Thank you very much indeed. Can everyone hear me okay? Yes, I think that microphone is working. So I was very excited when Kevin came to speak to me about this because I think this is a really, really interesting talk that we can talk about here. We've got, there's a lot of really exciting existing and emerging technology that's come through that can have a huge impact on our industry. But there's me, hello. My sort of bigger question was the title. So Kevin came to me with this title and said, this great technology protection myth. And I went away and said, well, what is the myth? Do we all agree on the same myth? So I went and asked a few colleagues, a few friends in the industry, what do they think Kevin meant by the great protection technology myth? And actually, depending on who you spoke to, depending on what company they work for, where in the industry, which part of the business you are, you got a very different answer. So some people feel that actually we're already gone too far. We're too reliant on technology. We've removed all nuance, all human judgment from what we do. Another view, and this is very much the view we get from people outside the industry, particularly from insurtech startups, people wanting to go and disrupt our industry, is that we're dinosaurs. We're living in the 1990s with 1970s technology, or perhaps more damningly that we're blockbusters, we're Toys R Us, we're Woolworths, and we don't even know it yet. We're about to be disrupted. We're about to be put out of business by Amazon, Google, Microsoft. I'm sure you wouldn't. And our whole industry is going to be taken away. There is plenty of new technology, and with the advent of the generative AI that we've been talking about, I think we're going to see challenges to the model we currently have around protection. But I think we just need to take a little step back and not be too rushed into panic. The companies I mentioned before, they did get taken out by technology, by new changes. But it wasn't necessarily the existence of technology that ruined them. It was their inability to adapt and to adopt new technologies. Netflix was shipping DVDs long before it did streaming. Blockbusters could have done that. There's nothing about it. Toys R Us had a perfectly good website to go and sell their wares online. It's just other people did it better, slicker, cheaper, faster. Some of the retail giants that did survive and have thrived in this period are the ones that have adopted the technology as it arose. So I think IKEA was one of the first people to use things like augmented reality. So you could use your phone and have a look at what a Billy bookcase would look like in the corner of your room. Those people who are willing to go and adopt technology thrive. So what do we need to do is we need to look for what is the technology that we can take on board in protection. What do we need to take on board to survive? And what can we ignore as being unnecessary and just a bit of fluff? Actually, one of the areas that we already have seen advances is around underwriting, individual pricing of business. We're pretty good at the technology there, and the advances we've made over the last few years have been actually pretty staggering. You know, if you look at what we've got now in terms of automated underwriting rules, in terms of the engines that people now have, and the ability for consumers direct and brokers to go and access that and get a quote immediately, quickly, it's pretty staggering considering where we started from. And the advent of some of the new data that's going to be out there, I mean, we've all seen that the NHS app now you can actually access your medical records finally online. But also, as we've talked about for the last 10, 15 years, the wearables, the nearables, the other data we have out there, shopping, credit, banking data. There's so much more data that we can use for risk factors that we may well see things being done better. What we haven't yet seen is people really taking those steps forward. We've seen a little bit of people using steps and data for underwriting and pricing. But we've been told that there's this huge volume of data out there. Why can't we be more like some of these tech startups? Why can't we be more like the big shiny new app, as Roger put it? I think where we're going to be is we're going to have to answer that question. When someone says to you, I can give you access to all the data on my phone. You can look at my shopping record. You can look at my banking data. Why do I need to go and be underwritten in the way that I was always underwritten? Why do I need to be advised in the way I was always underwritten? Why can't we be more like Uber, Tesla, Airbnb, whoever you want to go and point to? Well, I've gone back again. Sorry. These are the questions these are the responses that people tend to come up with when those are put forward. And I think there's actually something to them. And I don't want to be the guy who says, nah, there's nothing in any of this new tech. But both these statements, I think, have validity. Insurance is different. And we need to recognize that. We make long-term commitments to people, to families, over 10, 20, 30, 40 longer years to go and pay out hundreds of thousands of pounds in the event of a catastrophe happening to them. We do that and we guarantee what price we will do it at. This is very different to advising someone what film they should watch next on Netflix. This is different from price optimizing a taxi ride home. If we get it wrong, and I think Sarah touched on this point, it can have huge complications for people. If we don't offer the right cover, or if we don't give the guarantee that we will pay out, this can change people's lives. Equally, as a reinsurer and insurer, if we get it wrong and price it wrong, it can have huge impacts on our companies too. We have to also consider the regulation, data protection. We're in a very regulated industry, and that is also different to many other industries that have taken on technology in different ways. The second point is slightly more nuanced and I think also true, which is that the UK market is different. Now, I'm not going to stand here and say, oh, this is because the UK is so much more special and different to all other countries. I could equally have a slide up here that says the German market, the Singapore market, the US market is different. But I think we have to recognize the particular peculiarities of each market. The history, the structures we have in place now, the willingness to engage with financial services, the trust of the banking, the financial services, the insurance industry. I could give a couple of examples on this. And I've used this example a number of times, so apologies if you've heard it from me before. I remember speaking to my colleagues in the US a few years ago. We were talking about technology, about innovation, about new insurance. And they said, we've got a brilliant example and you'll love this. And they pointed me towards a company that was, I think, based out of New York. They said, these guys are going to absolutely disrupt the US market and they're going to do it with tech and it's new and it's interesting. It's like, brilliant. I went to their website and it looked very shiny. They had some good designers involved. And on the front of it, there was a big button that said, buy now, apply now, buy your policy here. So I clicked on it. I had to lie a bit about where I lived. And then it got into the questions. There were still underwriting questions. Okay, well, I know that we need some underwriting questions. That's okay. But they went on for page after page after page. After about 50 or 60 questions, it had finally finished. They'd asked me everything about my entire medical history, my family's medical history. I thought, okay, it's a bit much, but let's see what the price looks like. I get to the final page. It doesn't offer me a policy. It offers me the opportunity to go and book a blood test in 2 weeks' time at a local clinic. But this, for the American market, was deemed revolutionary and new and was going to disrupt it. On the other side, I speak to my colleagues in East and Southeast Asia, and they point towards a new innovative product every single week that is bringing something new to those markets. They talk about the rise of the super apps of Grab and Gojek and WeChat, places where you can do everything you want on your online world. You can buy your shopping there, you can order a taxi, you can pay a bill, you can get a loan, and you can buy insurance. Now, those insurance products you buy there range from short-term GI through to long-term life insurance, and they don't ask for blood tests and 50 pages of medical questions. There's barely any underwriting at all. Now, I would say that both of those extremes wouldn't work in the UK because of our history, because of where we started from. But again, maybe I'm being negative, maybe I'm being pessimistic, because I think one of the things I find most of all is that it's really hard to predict this stuff. So our head of data analysis at Genry often sort of quotes this statement here, the idea that we overestimate the effects of technology in the short term and underestimate it in the long term. And I think we've all seen this impact. As Sarah spent talking about, all the conversations we've had in the last year have been about generative AI, has been talking about ChatGPT, has been talking about how this is going to revolutionize our industry. And do you know what? I think it will. But we have to go back and look. What were we talking about 5 years ago, 10 years ago, 20 years ago? If you were talking 5 years ago, it was probably the blockchain was going to be the new thing, that everything was going to be put on the blockchain and that all our insurance contracts were going to be done that way. 10 years ago, I remember standing in stages like this talking about how big data was going to really change everything we did around underwriting. Maybe it did. And maybe 20 years ago, it was all around how underwriting engines were going to go and automate that process. Some of those have come through, but they've come through at a more regulated pace than I think we would have expected the moment we saw the new exciting technology. So, what have I said so far? I've said that insurance is different, therefore, everything Sarah said doesn't really apply to us. That the UK is different, so we're a little bit special and we won't change either. And I've said that you shouldn't make rash predictions about the future. So, predictably, I'll just walk straight into that bear trap and start talking about what I actually think is going to happen in the future, because why not? So, I've spoken to a number of colleagues about where we see the future. And we do see that AI is going to have a huge impact. And we think that the opportunities that it affords us to increase engagement with customers, to reach a wider audience, to be fairer and more inclusive, to use the words that were on the responsible AI principles from Microsoft. I think those are really, really key. I mean, it allows us to reach a wider audience and be fairer and more inclusive, and I think that's really key. I think on the terms of advice, AI is going to be hugely transformative. I don't think it will replace advice, but I think it will complement, and people will be using it and already using it to go and reach more people with lower cost. But one area as a reinsurer that I'd like to talk about is around claims, because it's an area that is already seeing huge change in the last few years. I feel claims is the one that has been left behind a little with some of the tech that brought in compared to where we've been with, for instance, underwriting. As a reinsurer, we spend vast amounts of time and resource manually underwriting claims, and rightly so. This is the moment of truth. This is the point where we as an insurance industry get to go and show what our value is. And we want to do it right. So we don't want to have, as Sarah put it, have computers saying no. But we can do it better. And actually what's going to come and what is already coming down the line are things such as this sort of online claims portal. Rather than putting a claims form, phoning someone up, making a claim, you will just use your phone and you can just, as you say here, use this imaginary insurance company here, use this claims portal. So this is for instance, for a disability product for IP, and the idea is you go in and you say, I promise I'll tell the truth. Yes, this is my policy. And here you are, let's just confirm this is what your coverage is. It is own occupation, I'm an actuary. That's all good. That's definitely me. So my occupation hasn't changed. So it tells me what does my income protection policy offer me, and then it says I just have to confirm that I am unable to work due to illness or injury. Therefore, great, I can go and make a claim. So what happens now? I would use natural language, because again, we don't want to be using drop-down boxes. We don't want to be using sort of pick out a simple thing. I fractured my collarbone while biking. The technology should be able to use natural language, because that's what someone would say if they called up their insurance company. It would then say, okay, you've got a fractured clavicle. It would feed back the technical term, and then we start using the technology. So, I mean, this is a very simple case. I've broken my collarbone. I'm an actuary, so I'm going to be off for a certain number of days, and it's going to be pretty obvious, and therefore they can go and give me a claim saying, there we are, we've guaranteed it that we'll pay you for a short amount of time. And obviously that would be different if I was not an actuary, if I was a HOD carrier on a building site. That would clearly make it a very different time off for my broken collarbone. But this is pretty simple. That was a nice, simple case. Broken collarbone, I'm definitely going to be off work for a little bit. What we don't want to do is go and take too long dealing with the small cases. We want to be able to go and sort of put our risks into different buckets and spend more time and use our very qualified claims assessors, who are all nurses, occupational therapists, doctors, people with real medical qualifications. We want them to be looking at the more complex cases. So the idea is that that first case would sit in sort of bucket one. Bucket two would be something that had a little bit more complexity, a bit more automation, maybe AI, but the human would still be checking. The final decision would still be made by the human. And then to the right, the ones where we want our people to spend our time on, we would let them focus on the most complex one, but we wouldn't leave them on their own. There would be AI assistance to that, and therefore we would be able to be more focused on that. So I will finish there. Just to sort of echo what sort of Sarah said earlier, there are huge opportunities with things like AI. I want us to embrace technology, but embrace it in a responsible way so that we can bring it in and allow it to complement and add to our business and not go the way of the dinosaurs of the tech boom. Thank you very much, everybody.
Thanks very much, Alastair. So our next speaker is Joanne Cole. And Joanne is a founder and CEO of BrokeriQ, which launched in 2020. Having worked in financial services and with data and technology for a number of years, Joanne now helps technology shape the protection journey for us all. So please put your hands together and welcome to the stage, Joanne Cole.
Good morning, everybody. It is so great to be here with you all this morning discussing the topic of the great technology myth. I must say it is very daunting for me to be up here in front of you all this morning. As Roger said, I have a background in data analysis, and I feel like this is almost a role reversal from where I was almost 6 years ago as a school teacher. Standing in front of a classroom of pupils where I felt very comfortable and very natural and had a lot to learn from me. And given the wealth of experience with everybody in the room today, I think there's a tremendous amount I can learn from all of you. So thank you to Kevin, who unfortunately can't be here, Joe and Roger from the Protection Review team for inviting me. Alastair highlighted some great points, which I think feed very naturally, Alastair, into what I'm going to speak about today, possibly from a different perspective. Today, I'm going to focus less on the myths of the technology, as I find there is one big myth that we all focus on, and that is that we don't have good technology, as Roger highlighted at the start of this talk. And I think that is a myth, because I think we do have good technology. And I think we've even better tech that is emerging. So instead, today, I'm going to focus on the realities that I have encountered within the protection space, and focus on these 2 points. Are we looking at technology from the correct perspective? And 2, are we willing as an industry to adopt the new technology that is already available? And I think that feeds on from what Roger has mentioned and also what Alastair has stated before. I first came into the advisor space just over 6 years ago, so quite new. Prior to that, I spent 16 years in education, where I focused largely on data analysis and digital transformation, digitising legacy processes to ensure the very best outcomes and support for our pupils. And I feel that this is very similar to the protection space, because ultimately we are all here today because we want to ensure the best support, cover and outcomes for our customers. By now, you'll have heard my very strong Northern Irish accent. So it's a bit of a different accent that we're used to, where traditionally we have a large presence in the protection space. And Roger was just saying, as I met him coming in this morning, that he has just returned from an event in Belfast, and he was blown away by the strength of the protection industry there. A real statistic, the advisor that I trained with, who's been in the industry for over 40 years, a great guy called Kieran, has been responsible for facilitating the payout of 3 critical illness claims in the last 2 weeks within a very small village in Northern Ireland, which I think is a real testament to the strength of the protection industry in Northern Ireland, but to this industry as a whole. It was while working for Kieran that I got to see firsthand how proper protection could make a difference in the lives of people in the most difficult times of their lives, and I was hooked. My passion, though, was on client engagement. How we could better engage, how we could better educate, and how we could bring clients on a journey of protection. And of course, technology played a huge role in this. And the reality that I encountered, while we had lots of great technology, what technology really reached the end user? So I now found myself wearing 2 hats, one as a client and one as a new advisor, as I now sat in both spaces. 2 very different perspectives with ultimately the same goal, but very different thoughts and emotions. One of my now existing advisor clients recently quoted to me when I was preparing for this presentation. She said, "Joanne, too often technology in this industry is built by developers who have no real sight of the client." An interesting thought, and it made me think, are we looking at technology through the wrong end of the telescope? The recent AMI report quotes, 60% of consumers that have received advice more than once say they trust insurer claims more versus 40% that have never received advice. And why is this? Because people trust people. People buy people. I'm going to quote from Andy Walton's motivational speech from last year. I don't know if Andy's in the room, from the Mortgage Advice Bureau. But Andy states, "Why the heck are we not going on a journey with our clients? Why are we not engaging with our clients regularly?" Andy likened it to the dentist, and he was so right. The last thing you do when you leave the dentist, you book your 6-month review. And at that, you can barely get in for an appointment. So why are we waiting for 2 or 5 years' time when a mortgage is up for review to engage about protection? What if a client has gaps in their cover? How can we identify those gaps and keep clients informed? How do we know if their circumstances have changed? And Consumer Duty, thankfully, has done a great role in the last number of months in encouraging advisors to engage in those protection conversations, and more of those conversations are happening. But how can we use technology to bring our clients on a journey? Because life is a journey, and technology should be there to support the advisor and the client of protection on that journey. Which leads me to my second point I raised as I opened this presentation. Are we willing as an industry to adopt the new technology that is available? At an industry level, there have been so many great technology advances made. There are mobile devices today that can monitor as much about your health in minutes than would take a doctor a full day in hospital to diagnose. It's really quite remarkable. Alerts can be sent to prevent poor behaviour or risks becoming a reality. Yet adoption is still slow. And why is this? Is it the case that there is simply too much? Is it overwhelming? Is it hard to identify what is important and what technology really adds value? If you look at the slide, you will see a number of barriers that I have encountered at advisor level to the low adoption of technology. Cost. Technology is expensive, and with multiple platforms to run, the costs can easily rack up. And I think as an industry, this is something we really need to address, especially at that advisor level. Time. Running multiple systems in a busy industry, not everyone has the time to embrace new technology. Lack of integration. Closed systems that hold client data prisoner and prevent the adoption of new innovations. And simplicity. Simplicity is always key. And I highlighted that earlier. Are we looking down the correct end of the telescope? And fear. We've highlighted it already this morning with Alastair. Fear of change, fear of data compliance and security, which always provides that barrier to adoption. But should we let these barriers stop us from embracing technology? Or do we have to change our behaviour to encourage customers to change theirs if we want technology advancement to stick? Let's have a look at how other industries have done it. And we've already highlighted some of them this morning with IKEA. I'm going to focus today on the Amazon factor and ASOS, because these are my two go-tos when I need to get something from online. When Amazon was created, Jeff Bezos knew he would have to transform the online retail experience to change customer behaviour. Amazon's culture is made up of 4 key principles: customer obsession, long-term thinking, eagerness to invent, and taking pride in operational excellence. And Amazon has never wavered in its commitment to these 4 principles. For me, when I started on this journey, it was Jeff Bezos' obsession with the end user. And boy, did he get that right. He has changed over half the globe's expectations when shopping online. From my own experience, when I need something, as I did last Friday when my school sent me a message, my child's school sent me a message looking to Santa hats, the first place I went was that app on my phone. I am on first name terms with my delivery driver, Jordan, and Jordan always turns up the next day with that parcel that I need. And for that week anyway, I have succeeded as a mother in a busy working household. Another example is my relationship, and I highlight the word relationship with ASOS. I've been with ASOS from the very start of their journey. I have grown with them. I've watched them progress and transform. And most importantly, I feel part of their community. They target me on my shopping. They nearly know my style better than I know myself. Which brings me back to the 2 points I made at the beginning of this presentation. Are we looking at technology from the correct perspective? And are we willing as an industry to adopt new technology? And I wonder, just like we talked about earlier, can we use the Amazon and ASOS examples as a guide to help us within the protection space? This is something I thought of when I started out on this journey, not just preparing for today's conference, but on my journey over 6 years ago. And unfortunately, I don't think it is a simple yes or no answer, because the reality within the protection space is it is not as easy to replicate the Amazon and ASOS examples. Or we would have done it by now, or they would have done it by now, and that's a whole other conversation. Because we, of course, have many more barriers to overcome. It would be remiss of me today, while discussing the great technology myth, not to mention the reality of the situation and the obstacles that we must tackle. As an industry, we need to address security and privacy concerns, as well as resistance from traditional models and regulatory compliance, while trying to provide the best client experience and maintain the highest standards of data protection and cybersecurity. It's a mouthful for me to say. Quite honestly, it's an even bigger obstacle for us all to overcome. These are major challenges, and they feed into the adoption issue we raised earlier of fear, change, and security. While at the recent European Insurance Forum in Dublin just there in October, there was a panel discussion. And that panel discussion, one of the core topics was, has GDPR gone too far? And we looked at different models. We looked at Singapore and we looked at different places. And I agree with you, Alastair, we can't adopt those models here in the UK. And I'm not here to answer if GDPR has or hasn't gone too far. But it is a very real reality of our industry. But I know if I had have listened to every obstacle that was put in my path before I embarked on this journey, I would not be here today. So perhaps as an industry, we do need some more Jeff thinking, because we are seeing a shift in attitude from the younger generations who are more open to receiving advice than their parents and who see value in being protected. There is a shift in perception within this industry, and that is a credit to everybody in this room and this industry as a whole, who have really worked tirelessly hard over the last number of years to ensure that shift in perception. But these younger generations have an obsession with technology, and they're spoiled by the examples that we have quoted above. And we're seeing that these generations, they want that face-to-face advice, but they want it supported by a digital experience. So as I begin to conclude today, and I'm actually well in time, which is great, is there a great technology myth in the UK's protection market? I'm not sure. I think we have great tech, and technology development will almost certainly shape the future of this industry. If I take you back to the 2 points that I made at the start of this presentation, are we looking at technology from the correct perspective? And are we willing as an industry to adopt the new technology that is available? I can sum up my findings by stating, we have great technology, but adoption is low. We have many barriers to adoption. We need to work together to overcome those barriers to adoption. We need to look to other industries, for example, while recognizing the challenges we face. And we need, and this is very important from my own perspective, to look through the correct end of the telescope and put the client first as we continue to grow to meet the growing expectations of our clients. So as I wrap up today, for me, I want to highlight to all of us in this room, we must work together in protection companies, insurtechs, startups, networks, advisors, to break down those barriers to adoption, use new and existing technology to enhance the client experience, build a community of protection, and bring clients on a journey of protection. So today, let's dispel the great technology myth in an industry that has so much to give and so much good to do. Thank you so much, everybody. I look forward to speaking to you throughout the day.
Thank you so much, Joanne. I really enjoyed that talk. We need to do more Jeff thinking. I really like that. Maybe Joanne has just invented a new acronym for the industry, WWGD. What would Jeff do? Our next speaker is Gus Timpson. Gus has been founding and scaling tech businesses in the UK and Asia for several years. Now at Legado, he helps power front office technology for some of the largest financial institutions. And in case anybody is wondering, yes, he is from Edinburgh, and yes, he is Johnny Timpson's son. So please welcome to the stage Johnny Timpson's son, Gus.
Morning, guys. I actually don't have any fancy slides for you, like everyone else has, so you're going to have to just look at me. I'm hoping that's okay. We'll also not do any sort of long-winded intro. I'm Gus, and I think all of you know my old man, who I think is quite giddy about the fact that I'm here. I'm not going to continue this debate of whether or not the protection industry is or isn't using technology as well as it could be. I think we already know that it isn't, and there are steps that need to be taken. But I think Alastair and Joanne have made fantastic points today about what is in the way, what can be done. But I think there are some key issues and high-level themes that go quite a long way in illuminating why these issues are there, why the technology is not where it should be. So we're going to continue playing the blame game a little bit, which should be good fun. And at the end, maybe slightly more productively, think about what it is that we can do moving forward to get technology to where it needs to be. So we're going to start with the tech issues. And we're actually going to do a bit of a hit job on tech. This is obviously a space that I know well. I mean, we quite literally build technology for financial institutions like you. And obviously, I'm also biased. I want other technology companies to look bad and for us to look great. But that doesn't make any of the points that I'm making any less relevant, any less true, and any less damaging to the technology process and progress that the protection industry can make. I think we have a mass of technology companies that are not quite getting it. It takes more than great technology and the availability of great technology for us to change the way that this industry works and make it work for better. I'm not sure that we can really suggest that all of you are looking at a sea of fantastic technology and platforms that do everything you need them to do, just how you need them to do it, and that you are just being obtuse and ignoring them. I mean, you might be, but I'm assuming that you're not. And I think, to be candid, tech is at fault in many respects. It's very easy to blame you guys, especially, we're the technology people, we're the future. But a lot of what we're doing is keeping you guys in the past, and then we're complaining about it. We have tech companies that are not hitting your pain points. They're not producing the value that you need them to produce. They're compounding some of the issues that you already have. And they are taking an approach that means that even if the value is there in the technology, it's so difficult for you to be able to take on that technology and make the change that you need to make. So we're going to hit these one by one. In terms of not hitting your pain points, I don't think it's too profound to say that tech companies like to build tech. But what Joanne said, we have developers and technology companies that are so far away from you guys, from the industry. We end up with solutions, especially in fintech, solutions that are chasing after problems to solve. We've got technology just for technology's sake, not fixing the issues that you have. And then we have, and what is potentially worse, is technology companies that are trying to approach the issues that you have, the problems that you have, but they're looking at it from a technology lens that is, it's so simplified, it's so idealistic, as opposed to looking at it from the industry lens that you have. You see all the detail, the complexity, the regulatory issues with everything that you have to do. And the result of all of this is that we have technology platforms that don't encapsulate the value that you need from them. It's very easy as a technology company to, look at a space like the protection industry and say, look at these insurance Neanderthals with their, caveman technology. We'll give them our technology, and it's going to have this impact. It's going to create this experience and give them all of these benefits. Now, not to mention that half of those benefits around data and AI they're never even going to be able to take advantage of in the first place. They don't have the foundation for it. The other side of this is that you're looking at a technology that's probably quite expensive, and it's going to increase maybe some marginal efficiency in some small area of your operations. But the flip side of that is it's another cost to contend with, and it's another layer of technology that is being piled onto what is already too many layers of quite technology. And when we're doing that, when we're adding to this weak foundation of too many complicated, disconnected technologies, even if our intentions are good, we are not really fixing any problems. We're making them worse. And what we see far too often is the overselling and under-delivering of technology. It's going to do this, it's going to do that. The stars are going to align, and it's going to be the best thing ever. I'm sure that there's not many of you that work at a company that hasn't been sold the bill of rights to what will be the most amazing technology ever. And the reality, after too much time and too much money has been spent to deliver that technology, it's ended up being a replacement of your technology with some slightly newer, slightly flashier, slightly more expensive technology. And all the problems are right where they were. Now you're paying more for it. But potentially, the most damaging part of all is the approach that technology companies are taking in the way that they implement technology, the way that they make you pay for technology. It's creating so many barriers that it makes it so difficult for you to do the change, make the transformation that you need to make. You have massive, massive, complicated operations spread across dozens of books of business that have probably been rolled up and acquired over decades. They all have their own systems. They all have their own platforms. Nothing talks to each other, and they all have their own management. But we have technology companies with one-size-fits-all tech that maybe it looks fantastic, but you can't possibly deploy this across the entirety of your organization. You have a big oil tanker of an organization, and you cannot just turn that on a dime. We're forcing you to do too much at once, too much change, to turn your businesses on their head for you to be able to take on, again, technology that might yield a marginal gain in efficiency, some small benefit. And we conveniently ignore the fact that you have businesses to run, that you want to minimize the disruption of those businesses. You want to make the change that you need to happen without utterly destroying the stability of your business for a year. And the other side of this is the commercial models that we have technology companies using. And these commercial models, these pricing models, I don't even think they make sense to the actual technology companies, let alone to you guys. If you are a protection insurance company, you want to do some innovation, your budget is probably already pretty tight. How hard is it going to be for you to make a business case around a piece of technology, irregardless of how positive that technology is going to be for the business, when it's coming alongside a commercial model that presents half a dozen variable costs, all of them linked to some random input that you could never possibly model or forecast or predict? And then you're in a situation where, for one, you're paying for technology that punishes you for its use, which is not very helpful. The other side is you have absolutely no idea how much money you are going to be paying for this technology. You can't budget for it. And you also have no way of tying this to any return on investment. And when that's the case, it doesn't matter how good the technology is. How are you going to make the business case for that? And when I go through this and we talk about, the technology that's not producing enough value, an approach that makes it impossible for you to do business, and commercial models that are totally out of whack, is it any wonder that we are looking at a protection industry that is not our own Silicon Valley? I don't really think it is. I think it's par for the course. The thing is you are, as the protection industry, not in existence to procure technology from innovative companies. You have businesses to run and to grow. And no matter how difficult you can be to work with, and you are, if we're trying to sell technology into you to fix these problems for you and to make the change across your businesses, we as tech companies need to recognize that this is the playing field. We need to align our propositions, we need to align our approach, and we need to align our commercial models with your organizations, so that not only do we create great technology, but we create great technology that you can actually use. Now, this isn't to absolve all of you of sin, because you have a lot of problems in yourselves as insurance companies, but you know those better than I do, so I'm not going to sort of bore you with them. But I think the key point is technology companies need to work in your favor to help you create the change that you need to create. And that's not just limited to making good technology. You guys, please stop putting layers of really shitty technology on the rest of your already pretty dire technology. Focus on some of those underlying issues. But by working together, technology companies and the protection industry, if we take more of a partnership approach, we work in phases, we are flexible with our propositions so that you can make the changes you want to make, you can make them quickly in localized areas and bleed out the change across the rest of your organizations with pricing models that make sense, we might actually just start to improve some of the technology. I'm actually well in time, but that's all I have for you, so thank you for listening.
Okay, I'm going to be joined on stage now by our 4 expert panelists, and we're going to debate what we've just discussed. So I'm going to invite the 4 people to come up on the stage, and I shall tell you who they are as they make their way forward. So first of all, we have Stephanie Hydon, who's Director of Distribution at iPipeline UK and member of the exec of the Women in Protection Network. We also have David Mead, who is the founder of Futureproof, Joint Head of Protection at St James's Place and a founder member of the PDG. Daisy Chi-Dong is Head of Product and Pricing Europe at Bolttech, a global insurtech unicorn with presence across 4 continents. And finally, Adam Higgs is from Protection Guru, where he leads their protection research and is the product manager for their quality and cost comparison service. Welcome, everyone, to the stage. So I'd like to start with a question for Daisy, if that's okay, but everybody else feel free to pitch in. Daisy, what insights can we draw from other insurance sectors, for example, general insurance, where technology and innovation adoption seems to be, or is at least considered to be, more advanced?
We're seemingly quite behind in terms of, all the how to really bring the commercial value of this shiny piece of technology to really generate long-lasting business impact. And when we're talking about, for example, technology is not working for protection, I think we are really sort of like saying it's not creating or doubling the revenue overnight. It's not halving the loss ratio overnight. And it has very limited impact. I think Alastair mentioned there's some peculiarity about the protection industry that we need to be recognizing is the integrated nature of all the parties in the value chain. So if you think about, for example, Elon Musk, if we talk about disruptive technology, being one of the most disruptive technologists of our era, and he bring all the revolution into the vehicle, the automobile industry. And he also entered car insurance industry 4 years ago, 4 years plus 4 months ago, precisely. The Tesla insurance today is still facing very similar challenge us are facing for decades. Poor customer experience, long turnaround time. So what I'm trying to say is, if you think about the value chain, what's the difference between a car industry and what's the difference between, in the protection industry? The car industry basically is comprised of OEM, original engineering, original equipment manufacturer, distributor, and then the end consumer. It's fairly straightforward. And then if you think about the protection industry, the supply side, we've got reinsurers, we've got insurers, and within that, there's a dancing among multiple parties, the regulator, the underwriters, the claims manager. And then the distribution side, I think a lot of you are the experts in the room as well. There are multiple layers. And then the consumer, unfortunately, is not very tuned into this specific service or product which bring potentially negative value exchange at the point of purchase. So it's a very much complicated ecosystem. But in order to really address some of the industry problems like doubling the revenue or improving the efficiency, you need all the parties on the value chain to really come together. And the isolated pockets of innovation will have, unfortunately, limited impact.
David, there's been a lot of investment in provider processes, but typically these don't seem to create a spark, do they, to initiate consumer interest. How could we use technology better to help create that spark?
So a spark. So where does the spark come from? I'm going to start with a story because I think, speaking from an advisory perspective, I think that's probably one resonates with us. So about a year ago, one of my colleagues had a 32-year-old client on the phone, and he works in the film industry as a boom operator. And he'd taken out a mortgage. He'd been referred to us by a wealth manager that we work with, and he'd been referred to talk about life insurance. They then progressed the conversation into critical illness because it seemed more relevant for a 32-year-old single person with a mortgage. And at that stage, this guy was bought into that. But our advisor also recognized that really the most appropriate solution for someone like that would obviously be income protection. Single, no dependents, it makes the best sense. And the conversation went backwards and forwards over weeks to get this guy into a space to recognize that this was the right solution. And eventually, he took it out. Wind the clock on to this summer, and our advisor had a phone call saying this guy had been in a terrible accident at work, been hit on the head by a boom, and he's now in an induced coma. And our last report was he's still in that situation a month later. So when you look at the human aspect of this, because ultimately, I agree with an earlier speaker, we're in a people-to-people business, then someone has taken the time and had the empathy to give the advice that's appropriate for that client. His income protection policy is now paying out. So we, in our bit of the industry, have done our job, but the spark has come from a wealth advisor, in this case, sitting down and recognizing there was a need and, in this case, referring it to us. Obviously, they could have done that themselves. And it's quite hard to see how technology can take that time to create to help the client understand the needs they've got and the vulnerabilities they have. Yes, we can use social media. Yes, we can use all sorts of marketing and advertising on TV. But ultimately, it's about one person talking to another and creating the spark that way. So it might sound a bit Luddite, but for me, that's where it starts. And when our industry, when you look at technology and picking up on some of Daisy's points and early ones, when you look at how clunky our processes are, it's no wonder that the vast majority of people who could arrange protection in our industry, wealth and mortgage advisors, don't. So one hopes that Consumer Duty will change that, but really we need to make our processes, which we'll come on to within the application process, much, much smoother. We need to totally revolutionize them for people who have other interests in terms of wealth and mortgages to really want to engage and take the next step.
So we're actually saying that we really can't lose the empathy of the human connection within the process. It's interesting, isn't it? Adam, if most insurer investment in tech has been in processes so far, has this moved the industry forward, do you think?
We seem to talk a lot around wealth advisors not doing enough protection. But if we look at how wealth advisors work, they work very differently to how a protection advisor would work. And protection is pretty invisible in a lot of the technology that they use on a day-to-day basis. So is it any wonder that given the chance, they're just going to ignore protection when it's not visible in their day-to-day life and they're talking to clients fundamentally about something else in the first place anyway. Coming back to Dave's point there about that spark, how do we get that spark so we can at least get protection in the conversation so that then they can do something, whether that be refer that or whether that be do it themselves. But we need to be engaging with that technology that they use.
Is the mindset, Adam, that within the industry, maybe as we've always done, is the thought process is how do we accept more lives, or how do we underwrite more lives, whether that's accept or decline or rate, or how do we accept more claims, or how do we decline more claims, or rather than actually thinking, how can we use this technology to delight the end customer? How can we use this technology to delight the advisor? It's usually about how can we use it to cut costs? How can we use it to make more profit? Maybe I'm being a bit cruel there, but do you think we really genuinely do have that customer focus in our mindset with all this technology that we have available?
Yeah, I mean, ultimately insurers are businesses, so they want to kind of increase their margin. So spending money on tech to make their lives easier is understandable. I just think they could do more to engage with more advisors, not just the advisors that put the most business through them, but engage with those that don't put business through them in order to understand how they can nudge them to do more, protect more clients, and ultimately have more protection conversations.
I mean, that's really interesting. It's more about not growing the market as a whole. It's growing the number of people actually prepared to use you and the technology that you have. Steph, we often look at technology and data to solve our challenges, but what about the people?
What about the people?
What about the people?
What about the people? I feel like you're going to burst into song then at that point.
What about the people?
I think one of the things I've really enjoyed this morning is actually the discussion around people's influence on data and technology, and something definitely Sarah was talking about in terms of where we do that. And I think we've also talked about Amazon. Joe, by the way, I think we need like an Amazon klaxon. Does anyone agree? Like for industry conferences, we should have like whoop, yeah, Amazon. But one of the things that we talked about from that Amazon perspective was customer obsession. Now we have, as an industry, really bred a culture of competitor obsession. And I think that's really been driven by, if you look at the process we've put in place, it's been about how do we make it cheaper? We think we're doing the right thing for the customer because for years and years we've been said, actually protection is too expensive, people won't want to buy it, et cetera, et cetera. So we've focused on driving that price, and that's where all the development and support has gone into, is how do we make it cheaper? Which naturally you need better technology and data to be able to do that. The consequence of that is we have created a culture of being competitor obsessed and not customer obsessed. And it's where the technology is being deployed there. So that would be my, there we go.
Does everybody agree? Have we become competitor obsessed?
I think we've become an industry of fast followers. You know, people that don't want to take that risk, don't want to take that next step to be able to go into those places, because actually we don't need to. If they're not doing it, we don't need to do it. So we'll be fast followers.
If budget and resources were no concern at all, do you think there is something that we could build that could double sales in the future? Who wants to kick off with that?
Oh, that's $1 million question, isn't it? I'm going to be a proper fence sitter, which I know is rubbish for a panel guest. But I think essentially what we're looking at is going back to Gus's point, which is looking back at the foundations and putting our investment into that space. There's no point keep building on dodgy foundations. I think that's where we need to invest in, and that's where we need to really start to get there in order to be able to change.
David?
Yeah, so again, from an advisor perspective, there's something like 5,000 or 6,000 advisors who reasonably regularly arrange protection, and about 30,000 people who could. So the issue for me is how we address what's stopping those 25,000 talking about protection. And it's quite frank, it's return on investment. is if you're a wealth advisor or a mortgage advisor, and that's your core bit of your business, and we can argue about whether protection should be core in that as well, but that's slightly aside, then what's putting those people off going down the journey, doing the pre-sales, doing the fact find, making a recommendation, doing an application? And so for me, if the industry wants to take up a challenge, is how do we address that underwriting process there? How do we get more cases through without the need of touching the sides, going to doctors? Yes, there's things like digital GPRs, which are really making a big difference, but it's still really clunky and really off-putting for people who aren't geared up to write protection.
Yeah, so I'll kind of continue David's point. If he's taken make the underwriting easier, I'll continue the theory of engaging more with those advisors that don't do protection. So become more visible. And this is a whole industry. It's not any particular part of the protection industry. It's the existing technology, it's the advisors, it's the insurers. How can we better engage with the tools that the wealth managers use, that mortgage advisors use, in order to make protection more visible on a day-to-day basis? The regulation, theoretically, is already there with Consumer Duty to enforce them to talk about protection. Let's not make it easier for them to ignore it by not being visible in the tools that they use on a day-to-day basis as well.
Okay, I wanted to just finish off the questions that had already been submitted with this whole question of disruption. Are we ever going to be disrupted by somebody else? And if so, by who and when? And what might that disruption actually mean?
Yeah, I think it's another interesting myth. Whenever we talk about technology, I think there's a bit of a obsession about disruption. We always talk about revolutionary or, disruptive changes which gonna overhaul the industry, change the way people buy and perceive protection products totally and how we sell. I think sometimes we sort of a little bit overlook the power of incremental and evolutionary changes being brought by technology.
Amazon have obviously already gone into general insurance, and I took a look at the journey, and to be honest, it wasn't much different to a normal GI journey when I went through that. I think what they can do is, through the power of how well they know their audience, be better at engaging and finding those opportunities of when someone might be willing to talk around protection if they did come into this environment. How far they take that, again, whether they'd work with reinsurers and how that might impact, and what they know about the client based on spending and what they're purchasing, may well help them. It may well also be a case that they work with the industry, so they partner with a Future-Proof, a Life Search, whoever it may be, and they just take away the kind of standard rate cases from everyone else, and anything more difficult stays within the kind of intermediated market. I certainly think their power is in knowing their clients and being able to potentially have the ability to put protection in front of a client at the points at which they might most be or should be thinking about it.
Okay, thanks for that, Adam. Now I'm going to open it up to the floor. Graham's down here. First question from Graham.
Graham Symes, Health and Protection. I've got a question. There was a really interesting point that Sarah picked up on, and I think Alastair alluded to it. I guess if you're an advisor, one of the biggest fears you're going to have with artificial intelligence is it's coming for your job.
It's still back to that initial spark and the story I told at the beginning about someone who's prepared to interact and go backwards and forwards to get to a situation where a client feels comfortable and they buy into the solution being made. Could that be done by AI? Probably, but not definitely. And in the meantime, we've got a role to play that's really important. I see technology more about assisting advisors and making the life easier.
And it's not new technology. I think what we are going to see, though, and what this enables is the customers to have that education. We've seen from the AMI research again this year, again, that age group wants to have, the next generation of customer wants to have advice, wants to speak to someone. So where AI can be really helpful is getting you started on that journey, going back to the Spark piece. It's all about sparks today. Get them to create that themselves. They're able to then start to understand that. It's about having the right messages at the right time. And the algorithms are already allowing us to do that and have those conversations. So I think, it's not going to replace an advisor. It's about removing some of that initial hard work, that sort of manual lifting, and then when they do come and speak to someone like David, where they're going to have a real conversation, they're already down that journey, so it's about creating that efficiency. That's what it's for. It's not going to replace, it's going to make more efficient.
Thank you. We're sort of running out of time now, but I have been noticing that Ian, sat over there, has been simultaneously shaking his head, nodding his head, gnawing his own arm off. So a few remarks from Ian before we close this session.
Thank you. Good morning, everybody. I think I feel a little bit like Jack Nicholson in A Few Good Men. There's 5 simple words I'm going to use. You can't handle the truth. I'm sorry to say that the technology in our industry, in the protection industry right now, is embarrassing compared to what we could do. And there are very, very good reasons why, the wealth and protection. Joe's right. We're not looking down the right end of the telescope. We need to be understanding why it is that the biggest pool of people who could sell protection don't sell protection, and that's mortgage and wealth advisors. Really, we've got to stop living in our own echo chamber and believing our own PR. If we look at other adoption of technology elsewhere in the industry, at one point protection was far ahead of wealth. Now the reverse is true. But I just want to bring in one last set of numbers for people to think about. I was looking at some research last night that JD Power have done. And when you look at how people want advice in the future, 56% of Gen X and Gen Y want their advice digitally. When you come on to planning, it's 59%. When you come on to service and admin, it's 74%. So I think we need to have, now the numbers are very, very different for the baby boomers and Gen X. But the truth is that Gen Y and Gen Z are the future. So we need to start thinking about our future customers, not our customers of the past.
Ladies and gentlemen, can I have a round of applause, not only for our panelists, but also for our speakers as well?